Welcome, one and all, to Big Business This Week. I'm JD Durkin here on the trading floor of the New York Stock Exchange. Lots of business news the last few days to unpack as people are soaking up the final few dog days of summer. From Apple's big announcement at the White House to Elon Musk's Tesla package, as well as, of course, the ongoing evolution of all things ChatGPT. Here to break it all down with us this week on the show is the news director at Fast Company, Christopher Zara. Christopher, thanks for being here. Nice to have you back as always.
Yeah, thanks for having me.
All right, so let's start with this Elon Musk news. The Tesla board reinstating Musk as the highest paid CEO in history, of course. It's a pretty
Yep.
staggering sum, $29 billion pay package. What message, Christopher, do you think this sends to shareholders and really the broader tech industry as well?
Yeah, sure. I mean, the message I think it sends is that Elon Musk is Tesla. I mean, he's so tied to it as a brand, and as a company, and they're kind of acknowledging that with all this money that they're giving him. I mean, his original pay package obviously has been tied up in court. That was even a bigger sum. But so as that's tied up in court, they've given him this money, which is also a very large sum, $29 billion. And yeah, I think it really is just solidifies the idea that without Elon Musk, Tesla would be a very different company. In terms of it actually being a company, there are a lot of problems with Tesla. The sales are falling, the profits are falling. It's having trouble competing in the self-driving space now. That's very important, and I think not investors, but the board is saying, you know, without Elon at the helm, like, it's going to be even worse. You could argue for or against that, but that's clearly how they see it with this big pay package.
Christopher, have you been in the camp, as many have here on Wall Street, that Tesla's stock largely moves as a bit of a proxy of Elon Musk's personal support?
Yeah, I do. It feels a little bit. There is a sort of a meme stock element to it, and what I say that is it trades on belief, and the belief in Elon Musk as a leader. And we saw how it declined quite substantially when he was involved in the government efficiency activities that he was doing earlier this year, with essentially leading a lot of layoffs. These were unpopular. The things he was doing, not just politically, but also with the idea that, like, was sort of cheerleading all these job losses, which I don't think people love. And it showed. The stock went down, I think, because his brand value was perceived to have gone down with all that activity. So yeah, I do think it's kind of a belief stock in a lot of ways.
Does this reinforce or defy current executive pay trends? How different is this, or anomalous is this versus where other CEOs are in the industry?
Well, it's big. I mean, I think that you can make the argument that a lot of CEOs are really overpaid. There's lots of research about how the CEO to employee ratio has just gone astronomical over the last few decades. This is just one step in the direction of going even farther, like with these giant pay packages. It's very rare that a company has someone like an Elon Musk who is so intrinsically tied to the company itself in terms of a brand. So I think in this case might be a little bit of an outlier, but I also do think there's a broader trend there of outrageous pay packages for CEOs, and this is an example of that as well.
Such a part is the calculus to keep Elon Musk where he is, focused on Tesla for at least the next 2 years? Because let's be honest, that's been a big question, especially around the election. To what degree is this guy going to stay where he is, and maybe staying focused on any given company is a different
Yeah.
challenge and a different situation altogether?
Yeah, sure. Focus is an issue for Musk. I think everyone knows that. I think the letter to the shareholders along with this pay package sort of acknowledged that. I mean, they said part of the reason we're doing this is to hopefully keep him focused on Tesla. I don't think there's nothing in the package that says he can't do other things. He obviously runs other companies like SpaceX and XAI. But the focus element of it, I think, is partially what they're doing here. I hope that they probably see that he'll see this money as a reason to double down on being the CEO of Tesla, which is not something that a lot of people have associated him with over the last 6 months, as he's been more involved in politics. So yeah, I think that's a big part of it.
What degree do you expect, or what will you be looking for to gauge whether or not he remains as actively involved with politics? Obviously, a presidential election, that's the big one. The midterms tend to get less focus. State and local government elections tend to get even less focus. But he's kind of gone back and forth, I feel like, with his willingness to continue to support candidates
Yeah.
in other non presidential races. And I feel like that's got to be something, if you're an institutional investor in Tesla, you're sort of looking over your shoulder and perhaps hoping that he somewhat limits his political activities.
Yeah, yeah, definitely. I think that it's hard to predict. I would say that like it's obvious that he cares about politics a lot. Whether you agree with his politics or not, it's something that he just seems to really revel in being a part of. And I don't see that changing. I think that he'll try to focus on Tesla as like they want him to, but he has a history of not sticking to what people want him to do. So even though like this package is kind of like the carrot, like to on the stick that's going to theoretically make him focus on Tesla, he has a history of not following through with that type of focus. So I wouldn't be surprised if, as you say, during the midterms something comes up and he gets behind an issue or a candidate or some cause that's political, and goes right back out there on X and starts tweeting about it.
Yeah, it's really interesting. He's had this relationship with someone like Ron DeSantis during his run for the presidency, and I wonder what a post-Trump GOP sort of looks like in terms of Musk's involvement. Another figure from X, of course, is the now former CEO, Linda Yaccarino. She made headlines this last week, a new board role at
Yes.
a health company called eMed. What should we make of that? It's not so much, I think, that Ms. Yaccarino has a healthcare background, but clearly lots of executive experience at this point.
Yeah, I was fascinated by this. I was really surprised by it. To me, it's like it's the career pivot of the week for sure. Like I don't think anyone really saw this coming. I don't think a lot of people didn't know what this company eMed was. It appears to be a telehealth company that's somewhat involved in the popular weight loss drugs, the GLP drugs that help weight loss and diabetes. So there's obviously a movement there in terms of like a cultural moment for what she's doing and the space she's going to live in with this new position. But as you said, her background is in advertising. She ran advertising for NBC Universal for a long time. How those skills translate to what she's doing now, I really don't know, but I think it's fascinating. It'll be really interesting to watch. I don't think this is a huge company. So it's just, it's something that'll be great to watch and see what happens now that this company has obviously elevated its profile by hiring her. So
We've had a lot of news in the general entertainment and media space that has really been shaken up. I mean, you wait 5 minutes for the dust to settle on a deal, and it changes just that rapidly. Let me get your
yeah,
take on Paramount and Skydance merger. They cleared usually
yeah,
we call them regulatory hurdles, but I think in this environment, it's fair to call them political hurdles straight
yeah.
up. What do you see as being the biggest implications of that for the theatrical and the streaming landscapes?
Well, it's good for the streaming part of the business. I think that they really need They really need this cooperation from Skydance to go to the next level. They want to compete with Netflix and Disney. They have to get bigger, and they have to do it that way. I think that the more troubling implications is kind of, as you just alluded to, how this was done. The FCC appeared to make it conditional on the idea that CBS, which Paramount owns, would somehow change its news strategy and its perceived bias. The fact that this seemed to be cleared based on that contingency is troubling, and I think it brings us into some new territory that if you work in the news business as I do, you don't look at this as a good sign. Other than that, it's like, business wise, I think the merger is obviously, well, it's a kind of a wait and see. Like I don't know if it's going to in the end help the company compete with Netflix and Disney because streaming is a tough environment, and it's a
Do you,
competitive environment.
yeah, do you put Disney and Netflix sort of here as the leaders? It was interesting to look at Disney's quarterly earnings call this week because despite maybe a bit of a mixed bag, I know they missed on revenue, but we saw a
Yeah.
lot of downward pressure on the stock. And I feel as if I hear a lot of conversations from analysts to say what you said, there's Disney and Netflix, but then either further in tranche, it kind of seems to me like it's Netflix and then everyone else as well.
I think, we're forgetting YouTube actually, and that's the thing that like they get left out of these discussions because they're not really known for their original content and their premium TV offerings. But YouTube is the streaming leader. They're the ones that they are the ones that have the biggest platform for streaming. And then there's Netflix, and then Disney, of course, is like trying to compete more on a Netflix level where they're offering premium, must-see TV, the kind of traditional TV that we think of when we talk about television. So I think that, I do feel like, Disney now with having control of Hulu and trying to turn that into a full bundle and a full package of offerings. I think they have a chance. I don't think it's going to be easy. Netflix obviously is still the leader in that space, but I do think they're going to give Netflix a good run for their money. Disney also has the high value IP, the intellectual property that is very valuable to them.
Yeah, yeah. I mean, it's incredible to look at Bob Iger as sort of paying dividends from his first iteration as CEO, which includes like the FX, the Fox deals. To me, I now just sort of equate the Marvel Cinematic Universe with Disney, even if it hasn't always been that way. I feel like there's so much of the reality of Disney today that's because of Bob Iger's deals, and now you throw in the NFL deal
Yeah.
on top of all this. And to what degree do you look at Disney foremost as a streaming company? Are the Disney priorities still largely split between the parks and live experience on the one hand and direct to consumer on the other? Or is the influence of the parks slowly waning in favor of the direct to consumer streaming business?
So I would say that Disney is my our head of editorial strategy actually just wrote an article about this week about essentially speculating who should run Disney after Bob Iger finally steps down, and he mentions the CEO of Airbnb, and I think that the reason he said that was because Disney is to a large extent an experiences company now. The theme parks and the live experiences are a big part of a big growing piece of its profits, and more so than streaming in terms of its operating profit. And so you have a guy who's running Airbnb who also did a great job, running an experiences company, and he's also a bit of a showman, sort of like Bob Iger is very good at being the face of Disney. He's out there and he's charismatic and he knows how to speak to an audience. So Disney needs someone like that, and I think the person they do finally get is going to be whoever it is going to have to be really paying attention to the live experiences, the theme parks, and the cruise ships and all the stuff that you don't necessarily think of when you think about Disney as an entertainment company.
Yeah, with regards to Brian Chesky at Airbnb, I believe your colleague wrote the move would send shockwaves through both Hollywood and Silicon Valley,
Correct.
but there may be ultimately no better person to replace Bob Iger than Chesky.
Yeah, I mean, I thought it was a fascinating story. Like it's not something I would have come up with. Like I certainly would not have picked his name if someone were to ask me to pick someone to run Disney. But I think it's a compelling argument, and I have said plenty of times in the past that Disney's place as a live experiences company is sometimes understated, and it's been true for a long time now. I followed Disney for a long time, and if you look at the piece of their revenue and profit that is made up by that unit, the experiences unit, you see that it's grown over the years. So
Yeah, it's interesting to listen to Brian Chesky's comments over the years, even look at his social media feed. He's a big fan of Disney. Chesky has said verbatim, if he could be anyone, it would be the original Walt Disney. There's obviously a lot of inspiration that he's drawing there. So that's a fascinating conversation and a really interesting take there.
it is, yeah, he has a design background as well, which I think is another unusual quality about him as a CEO. A lot of CEOs come from the business world. Brian is a designer by trade, and that makes him, I think, it gives him a sort of special creative way of thinking and looking at the world.
Yeah, that's really interesting. Let me get your take on the Tim Cook White House visit. I was watching it yesterday. It was after hours. It was after the bell. It was in the Oval Office. Tim Cook was there. Bessent was there. Lutnick was there. What do you make of the $100 billion additional investment, now bringing Apple's total U.S. investment here for manufacturing to about $600 billion? It's not a pure play move to purely produce the iPhone in the U.S.,
Yeah.
of course, but it does seem to be a step in the direction. I don't know if I'd call it the right direction, but it's at least the direction the White House wants to see. What did you make of it?
They are, I mean, they're really trying to play nice. I think that Tim Cook is doing what he feels that he has to do. I think Apple has been especially, exposed to the tariffs, right? So like, because Apple is by and large a hardware company. They make, you could argue, the most important piece of hardware in our society right now, which is the iPhone. And in order to do that, they have all these different components from all different parts of the world. Obviously, China is a big part of where they get a lot of their parts, and India and Vietnam. But Tim clearly sees that he has to make overtures to the current administration to please them and to also show investors that there is some stability here. If you look at Apple's stock, it has not done especially well this year, especially since the tariff announcements. It's up a little bit this week and over the last 2 days since their appearance yesterday, and since I don't know if you saw the 24 karat gold glass plaque that was offered with the Apple logo. So I mean, that was a bit of showmanship there, but like the investors seem to like it. I think what they see is this means there's some stability. They're working together. I think that the investors do like to see cooperation on this front. And so if nothing else, it has that component to it that I think makes it probably a good move, at least in the short term.
Yeah, Apple is the second worst performing so-called Magnificent Seven stock so far year to date. It is down about 11% from the start of the year.
Yeah.
Ironically, the only stock that's worse so far year to date has been Tesla. And when I think of Dan Ives of Wedbush Securities, he's sort of a permabull here on Wall Street. Dan likes to say Tim Cook is 90% CEO, 10% politician. And I think I really
Yeah.
watched that political acumen that Tim Cook has, which he really brought to the forefront during the first Trump administration. Tim Cook is someone who knows how to play the game with Donald Trump. And you
Yeah.
listen to his public comments, and as much as he can talk about, new investments in manufacturing, he is very quick and he knows how to pivot and make sure he is giving that effusive praise to the commander in chief, which I suppose if you are an investor in a company, that's what you want to see your CEO do. And it certainly appears as if he's positioning Apple once again to capitalize on what the rest of the Trump administration may hold. Is that a fair read?
Yeah, you don't want to see them fighting. I mean, that's the bottom line. And as erratic as the president can be with these tariff policies, if suddenly he decides he wants to punish Apple, we know he's capable and will do it with some of these tariff announcements. So like, yeah, I think that just the cooperation element alone is enough to, I would think, soothe the minds of investors a little bit. And that's why we see that the stock is up a little bit this week.
Yeah, another influential leader who has, at least very publicly, somewhat played the game the last few months with the Trump administration is the team over at ChatGPT, reaching 700 million weekly users. What do you make of that surge? Obviously, we're in this new era of large language models that are publicly accessible. Chat appears to be the leader. Are they the leader of the bunch, would you say?
Yeah, I think Google has somewhat implied that they are actually the leader because they have these AI overviews that kind of interact with Google search. I don't quite understand how Google counts quote unquote users of the AI overviews, because like when you search on Google, it automatically pops up and you don't have a whole lot of choice about whether that happens or not. So we can argue about who the leader is. Clearly, ChatGPT is the brand that everyone associates this new AI chat world with. So, and obviously they're growing like at a phenomenal rate. I find it really interesting to think about whether or not they are sustainable as a business. It costs an enormous amount of money to train these models and to operate these models, and then of course, to the data storage that is required is also enormous. I know that OpenAI, the parent company, supposedly lost like $5 billion last year. That was reported. So it's interesting to think about whether or not there is a sustainable business model behind all this growth. We've seen big companies like Uber and Amazon come out from a place of not making a lot of profit and losing a lot of money for many years to eventually becoming profitable companies. So it's possible that, of course, OpenAI, as being a young company, will eventually do that as well. But it's interesting to think about in this context because this space of large language models is so new.
Christopher, before I let you go, give me one story you're following, something you think we should be paying a little bit more attention to. Could be in entertainment, media, business, the markets, something you think that maybe we're not talking enough about.
So this just happened yesterday, but I would say Duolingo reported their earnings. This is the language learning app that is enormously popular with a lot of people. They reported enormous growth and record profit yesterday. And the reason I think this is interesting is because a few months ago, if you remember, the CEO came out and put out a memo and said essentially we're going to be an AI first company and implied that they're going to not hire as many humans to do work that can be done by AI. This caused an enormous backlash with a certain segment of their users, especially on platforms like TikTok. And it continued for months. So to the point where like every time they would post something on social media, there would be like 10 or 20 comments of people kind of, making fun of them for the AI stuff, right? And so this went on and on and on for months. So I was really curious to see, is this going to have any impact at all on their growth and their profit? And clearly it did not. And I think that is very interesting in the sense that we talk about some of the backlash that happens with these companies from a social standpoint, but then you look at like what actually is impacting their, their profit and growth in their business model. And sometimes this stuff looks worse than it actually is from the outside.
Shares of Duolingo up 27% today, now up about
Yeah.
34% since the start of the year. That's a fascinating one. I was not expecting that, but I'm glad that we got that in as part of the conversation.
Yeah.
Christopher Czar is the news director at Fast Company. Thanks for being on Big Business this week, Christopher. Always a pleasure to have you. Thanks for stopping by.
Okay. Thanks for having me.